Imagine a force so powerful, so invisible, that it can buy entire governments. And yet, almost no one knows its name, who prints the money that runs the world, who quietly decides which nations thrive, which crumble, and who pays the price. Today, we peeling back the curtain on the financial machinery that controls more than just wealth, it controls freedom itself. Origins of money power. To understand the power behind printing money, we have to go back centuries to when the concept of currency itself was first invented. Long before paper bills and digital transactions, money was a simple idea, a representation of value. Gold coins, silver bars, and trade goods formed the foundation of economies. But the true turning point came when governments realized something extraordinary. Money itself could be created out of nothing, but debt always had to exist to back it. By the 17th century, European banks had begun experimenting with what we now call fractional reserve banking. In simple terms, banks discovered they could lend more money than they physically held, creating debt and money simultaneously. This wasn't just a technical trick, it was a blueprint for power. Whoever controlled the creation of money could influence wars, empires, and elections. Key figures emerge in this story. Names like Meyer Amschel Rothschild, the founder of the Rothschild banking dynasty, who famously controlled large portions of European finance. And central banks, like the Bank of England, which pioneered government-backed lending and debt issuance. At first glance, these institutions looked like ordinary banks, but their true power was something else entirely. The ability to shape nations without firing a single shot. The rise of central banking. How money buys governments. Fast forward to the early 20th century. The United States, rising as a global superpower, faced a fundamental question: who controls its money? In 1913, behind closed doors, Congress passed the Federal Reserve Act. On the surface, it was meant to stabilize the economy, but the reality was far more consequential. The Fed gave a small group of bankers unprecedented control over the creation of money. By printing or withholding money, they could influence credit, interest rates, and the entire economy. This mechanism wasn't just theoretical. During the Great Depression, the Fed's decisions to restrict or release money literally determined which banks survived and which failed. Governments learned quickly, controlling money meant controlling policy. Nations dependent on loans or credit became subtly subservient to the institutions that issued that money. In other words, money was no longer just currency, it was leverage. By the mid-20th century, international finance had evolved even further. The Bretton Woods system centralized global currency markets around the US dollar. Nations could no longer print money at will without consequences. They needed dollars, and dollars were controlled by central banks. This is where the phrase money buys governments isn't just a metaphor, it's literal. Countries reliant on debt, aid, or credit lines effectively traded autonomy for access to capital. Breaking points. Crises expose the system, but power has its limits. The system of money creation and debt dependency works until it doesn't. Economic history is filled with dramatic collapses, from the 1929 stock market crash to the 1970 stagflation to the 2008 global financial meltdown. Take 2008 as an example. Banks issued trillions in risky loans, knowing central banks would likely bail them out if things went wrong. Governments, desperate to stabilize the economy, spent massive sums in rescue packages. The public absorbed the consequences: unemployment, foreclosures, and austerity measures, while a handful of institutions not only survived but expanded their influence. In every crisis, a pattern repeats. Money is printed or lent to stabilize markets, yet the real power, those who issue the money, emerges stronger. Governments appear to lead, but in reality, they are often following the directives of unseen financial forces. Modern parallels, the debt loop, and the illusion of control today. The scale of this power is staggering. Global debt exceeds $300 trillion, more than 3 times the world's annual economic output. Interest payments alone drain governments' budgets, forcing nations to borrow more money just to pay existing debt. Take the U.S. Federal Reserve as a modern example. Its balance sheet is over $12 trillion, a number that would have been unimaginable 50 years ago. Every new dollar printed isn't just currency, it's leverage, political influence, and a stake in global decision-making. Nations reliant on these dollars for trade, aid, or investment are subtly but profoundly shaped by the money's issuers. Even private wealth is part of the system. Major investment banks, hedge funds, and multinational corporations benefit from low-interest loans, bailouts, and financial instruments only available because central banks maintain liquidity. Ordinary citizens, meanwhile, carry debt for homes, education, and credit cards, often unaware of the systemic forces at play. Shocking data reveals repeating patterns. Every major financial crisis has been followed by greater centralization of power, increased government debt, and the expansion of institutions that control money. The same story repeats. Money created by a few dictates the political and economic fate of millions. Attempts to break free throughout history, attempts to reform the system have largely failed. Some governments have experimented with gold-backed currencies or local currencies. Others have tried debt forgiveness or strict regulations. Yet, each time, the global network of finance adapts and control remains concentrated. Why? Because money is more than paper or numbers on a screen. It's leverage, influence, and power. Without addressing the central question, who gets to create its structural inequality persists. Even cryptocurrencies, hailed as freedom money, face centralization pressures from exchanges, governments, and regulatory bodies. The system is resilient because power is layered, hidden, and designed to survive crises. What this means for you, so what can we learn from this hidden history of money and government? 1. Money is power, and power is invisible. The people who issue currency can shape economies, elections, and societies. Understanding this is the first step to recognizing your own economic environment. 2. Debt is a tool, not just numbers. Governments and institutions use debt strategically, sometimes to grow economies, often to control them. Public debt is rarely just accounting, its leverage. 3. History repeats, but awareness can change outcomes. From 17th century Europe to modern global finance, the same patterns emerge. Recognizing these trends empowers individuals, communities, and policymakers to make more informed decisions. The money that buys governments doesn't wear a crown. It doesn't announce itself, yet its influence shapes wars, policies, and the very freedoms we take for granted. Understanding this hidden engine of power is no longer optional, it's essential. Be aware, question everything, and always follow the flow of money. The story of money is not just history, it's happening right now in ways both visible and hidden. If you found this video enlightening, subscribe and hit the bell to uncover more hidden truths about global finance, debt, and the forces that control our world. The deeper you look, the more you realize the story of money is the story of power itself.